Hello everyone, this is Evan here from the Trade Risk on Wednesday, May 17th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. So we're going to jump right into things today with the S&P 500 having its largest move all year, down minus 1.73% in the SPY ETF. That's a little over 4 points. Largest range of 2017 to the downside, taking out the past several weeks of lows. Let's take a look at the weekly chart first here. You can see we are now back below the past 3 weeks of lows, and we're coming back into the April lows that we made right around 233. So coming in with a bit of a double top look now as we tried to look above this 240 area to start the week. So we had a break, intraday weekly break here to new highs, and then we had a rejection of those highs in very fast and short order, mostly by today, of course. Now let's dial it back. Let's take a look at last Friday. Let's look at this session here. We went into the weekend with a little bit of concern, but not a whole lot to really turn us into a bear. That was our analysis. The way we looked at it, there were more checkboxes in the bull column going into the weekend than there were on the sell side, though we did still have a little bit of a pullback off of highs. We saw some volatility on Thursday. We had an inside day on Friday. So there was, a little bit to sort of stop and pay attention to. And Monday, though, was a bit of a trickery day, right? We kind of had the rug pulled out from under us today with Monday's upside movement plus 0.55% in the SPY ETF. That was a breakout to new all-time highs, new closing highs. So the market started off on a strong footing this week. Breadth was pretty strong. The IWM was maybe a little bit of a flag as it kind of tailed off and didn't close quite near the highs of the day on Monday. But, again, all things considered, if you're looking at it from a trend, breadth, momentum sort of perspective, the bulls still sort of had the benefit of the doubt at this point, and this was a good start to the week. Now, Tuesday didn't quite give us that upside continuation follow through. We had that gap higher, but you can see we kind of failed to hold on to those highs, and we actually moved red on the day, just slightly down, minus 22 cents yesterday, but enough to say, okay, no immediate follow through and a close back into Monday's range. And then today, the rug pull sort of to the downside with that open gap, that opening print essentially below the past 2 to 3 weeks of trading here. So really sort of setting the trap and trapping anybody who was purchasing in here in the S&P 500, looking for continuation higher, looking for trend continuation and moves to all-time highs. They were suddenly underwater very quickly as we came into the session at 238. We briefly popped for about 50 or so cents in the SPY and then proceeded to sort of roll over for the remainder of the day. We had a little bit of hope around lunchtime maybe that the market could try and stage a bounce off of those lows, but that was sold into, and of course we know how things ended with basically just selling throughout into the close below 236. So a quick sudden move to the downside, a change of character day. This is a day to take notice, and it's something that I pay even closer attention to because it's coming at a pretty important level, right? It's prior all-time highs. It's that 2,400 level in the cash S&P 500. And again, this was the area where, or back in March, you can see this is the prior all-time high right up here around this 2,400 area, or 240 in the SPY. And then we sold off, came all the way down to 233. And then ever since, April with these two gap ups here, we've been just trying to grind our way to retest those highs. We got it on Monday, and now we're pulling off it quickly. That signals, or that shows just how, sort of a very clean double top sort of mentality here, that the market has failed to take out these highs after retesting them. It has failed to continue its trend, to continue in that immediate continuation pattern, and is in the process of sort of rolling over here. So the way we look at this going forward now, sellers in the short term are certainly have control. And again, a quick caveat, as we always sort of try and make mention of, this all depends on your time frame. So for the very immediate term, for the short term, next 1 to 2 weeks action or so. Sellers in control below the 20 period. We broke this trend line. We broke below prior highs. We're below the past few weeks of action. So we should expect sellers to be in control here. Now, does it mean we have to completely pull back, roll over, and have some horrible rest of the month? It does not, but we do have that pickup for the first time in a very long time, that to the downside. Notably, the volume today high, of course, about double the average daily volume, and we did fill this gap here from the 25th in the SPY. We came into this gap here on the 24th. We filled about half of it, but there's still a little ways to go here to completely sort of fill out this gap from the 24th. And the way I sort of look at it, this 233 lows, this general area from March and April, seem to be a very logical spot for the market to come back and retest, particularly if the sellers are going to stay in control here. Would not be surprised to see us kind of fall another 2 or 3 points to retest this level. It's a little over 1% from where we are now, so assuming another 1% pullback. Again, not saying it has to happen, but seems like a very logical spot to retest, and that will be an important retest because that's going to start to get the attention of those higher time frame participants, because now we're starting to deal with the 20 period on the weekly chart. You're starting to deal with multi-week, multi-month sort of structural lows here. So if we started to break below 233, that is where the market sort of opens up in my eyes to a larger pullback. But again, that's 2 steps ahead of where we are now. Not saying that has to happen or will happen, just keeping an open mind at some different scenarios. This, of course, could be a complete buy the dip, right? We could come in tomorrow with some gap higher, V shape, and this just turns into an epic, an epic shakeout. I think the probabilities of that are lower. Certainly not would not be my default expectations, but it's possible, right? Nobody has that magic crystal ball. So into tomorrow, I'm really just going to be looking at whether or not we do get that continuation. So do we see immediate continuation lower? Do we see some stabilization right away? Do we see a gap higher that V shapes? That's the context. That's the next step here in the story that I will be paying attention to sort of base those decisions, future decisions off of. But again, short term, the way I would look at this today, sellers in control, going to respect that and act accordingly. Depending on your strategy, that will mean different things to everyone. So that is the S&P 500. Let's take a look here at the IWM. You can see down minus 2.7%, so the underperformer on the day, and very quickly coming back to these prior lows here, these very significant, very long-term major lows here that have been in place since December late last year, December of 2016. Last week, we sort of discussed the bounce around here at this 138 area. We really wanted to see the IWM hold here. That was the bullish pullback scenario, right? We had this move higher in April to new highs, and then pulling back to 138 if we get stabilization, and then a lift higher and retest of highs. That was the optimistic scenario. Clearly not the case. We just battled it out with 138, and then of course today with the rug pull and open below all of these prior lows from recent trading and back into this range, and as I started the IWM segment here, back to major support. So back to the weekly chart, this is going to be a very significant level. You can see the 8 period starting to curl back over. 20 period is now above price where it stands. So there is some concern here that if the IWM decides to break down from this 133 level, that is certainly going to get the attention of some of those longer term participants. So that's something to really pay attention to. And as it stands right now, the IWM is just teetering on green territory for the year. So it's very close to going red year to date in the IWM. So that's also something to sort of pay attention to. And then finally, the NASDAQ 100, 2.5% to the downside, largest downside move it's seen in quite some time. Basically erased about 12 days of gains here from just today's session, which, really when you take a step back and just look at the run that this thing has had this year, this 2.5% really just looks, kind of small, very par for the course. I mean, the Qs are still up nearly 15% year to date. So some give back here, some pullback, some volatility, some type of rug pulling really can't be all that surprising here. Again, if you're a short-term trader, this type of move can be a very sort of can serve a big impact. But for the longer-term structural perspective here, the trend still very much intact. We are below the 20 period. We've snapped the immediate trend here of this fast kind of rising 8 period. But from a longer-term, larger structural position here, the Qs still the leadership group. Be interesting to see if they get follow-through selling to the downside. There's some open gaps down here closer to 132 where this broke out from in mid-April, so something to maybe pay attention to if we do get that larger pullback of another few percent to retest and refill some of those gaps. So that's the market as a whole. Qs continue to be the leaders, but clearly suffering a loss of momentum today. Russell 2000 approaching major support, and then the SPY S&P 500 back into the midpoint of its range. Sellers regaining control in the short term across the board. So that's the major market environment. Let's take a look at some of the other markets out there. TLT to start, getting a nice bid today, 1.5% back above this level here. This is what I've been waiting for TLT to try and get back above here to put it back in play to the long side. I really like it here. Almost was pulling the trigger on this towards the end of the day, but it's a bit too much of a chase. I don't really like entering I really don't like the entry here at the end of the day for my sort of process and strategy, just because it seems like a bit of a chase and really not that great of a place to kind of measure risk against. So I decided to pass on it, but something I'm paying attention to, TLT. I would like to get involved in that on the upside. A little bit of an uptick in volume there. So TLT getting that momentum. What else do we have? GLD will go there next, also getting that momentum to the upside, 1.82%, nice uptick in volume, getting back above the short-term moving averages, and basically coming back into this recent supply here. This 119, 120 level in GLD has been sort of an inflection point for the ETF. So let's pay attention here. This could be a place where price stalls out a little bit, but clearly, reversing and getting some upside momentum is constructive to see if the bulls can kind of reclaim, some ground here in GLD from what it lost in April. So pay attention to it. Could be emerging. I wouldn't want to chase it myself, not yet anyway. Silver, what do we got? 5 days of upside traction here. That's I guess mildly constructive, but given the complete sort of fallout here through April from 17.50 down to 15.25, we've retraced now about 25% of this downside move, coming back into this prior inflection area. So again, kind of a tough one to chase, although silver does, once it gets in motion, it likes to stay in motion. This thing does seem to trend once it picks its direction. It seems to kind of continue in that state. So maybe it just continues to levitate higher here. We'll have to see. Not my kind of setup, not something that looks very high probability for me. So I'm going to just pass on it and step aside. USO will go there next. USO now up almost 1% on the day. That's impressive, and that actually speaks to the S&P 500. I mean, just imagine a scenario where USO was down 2 or 3% on the day with the market, with the energy sector lagging. I mean, the S&P 500 would have been down another 50 bips on the day had that been the case. But luckily, there was some upside pressure here in USO, and it does seem to be trying to stabilize above these March lows, above this $10 level. That is starting to get a little bit constructive there. That is what I wanted to see. I didn't think that was the high probability scenario, but it's clearly taking its shape. So I'm paying attention to it. No real trade there yet for my type of strategy or time frame, but something I'm paying attention to. And natural gas, not quite holding green on the day, ended up down minus 0.54% off of the lows, kind of coming back into this messy sort of sideways range. So again, really just not seeing too much with these commodities as they stand right now. I think they're moving, but I'm not seeing any high probability setups at this time. So that wraps up some of the major markets. Let's take a look at some of the sector analysis. We'll start with IYT, which really got crushed today. So this is the transports, and you can see over 3% downside move, big uptick in volume there, breaking below all these recent lows. This is very clearly negative on the year now. So we are red on the year. We are below all this previous supply in here. So IYT, not looking so hot now in the short term. So that's one spot to pay attention to. Financials also for you shorts or for you for you sellers. Financials also in a very tough and fairly vulnerable spot. We are back to retesting this very significant level, this year-to-date support, frankly, at $23 in the XLF. We're back here. It was down -3% today. Pay attention to this level. If we start to roll over here, it's got that shape of a potential kind of head and shoulders top. We talked about the complete opposite pattern last Friday, right? Looking at something where that support was trying to hold into play, maybe some type of inverted pattern there, but that just didn't happen. We had a couple of days of upside progress here. It looked encouraging. It looked like, hey, this might be able to get going and break 24 and then be back to retest those old highs. But clearly, financials hit one of the hardest today on this rug pull. We just lost all of this this recent structure here. So financials very quickly, moving in the opposite direction and something to be cautious of and pay attention to. XLI, this is the industrial ETF. You can see almost kind of creating a little bit of an island top here already from these past 2 weeks. Very minor, but still just the breakdown here, very quick, sharp, goes to speak to the change of character day from today. XLE, this would be, holding up reasonably well here, just given the type of day it had. I mean, still looks fairly vulnerable here. I haven't been a fan or bull on oil or XLE recently, and XLE still sort of really hasn't changed my mind. But if it can hold above 67 and very quickly get back above 69, that would be constructive. USO again was holding green on the day today, but still got to be cautious. Still just in this down channel that it's been in since late 2016, and really haven't seen too much change of character. Maybe momentum slowed a little bit. Maybe it's a little more reluctant to sort of just trend lower, but still not seeing enough progress there in XLE. Semiconductors, I mean, pretty resilient, all things considered. I mean, 4%. Again, this zooming out here really just kind of shows you the big picture move, because from the top end of the channel back down, we had almost a 5% down day, and really that only took out the past 5 or so days of trading. So pretty remarkable. Still above the 20-period moving average there, even after this 3.5% or almost 4% down day. So quite impressive for semiconductors. Again, pay attention to follow through. That's been a very leading sector. So you want to see if there's continued sort of rotation out of semis. And then on the defensive side, you get utilities that are just staying pretty rock solid, up just marginally on the day, about 0.25% inside that tight range. Staples also slightly red on the day, but staying pretty resilient here in this sideways range. And the IYR as well, today anyway, holding in there, trying to hold on to this trend line. So something to pay attention to. Maybe starts to get some rotation there in the IYR at this trend line from really extending from January to December of 2016. So that, I think, is the last chart I had on my plan for today. So I hope you managed the risk and the change of character day today appropriately, and hopefully this video has helped. Thank you so much for watching. If you're new here, please go ahead and subscribe to our channel if you like the video. Put out more of these a couple of times a week. Thanks again for watching, and I will talk to you again soon.